Hello and welcome to a VSA Capital video. I'm Ollie O'Donnell and I'm joined by Ian Tchacos, Executive Chairman of ADX Energy. Ian, welcome.
Thanks, Ollie. Thanks for bringing me on.
You've had a busy week. Just closed a 3.5 million Australian dollar placement and are now back trading. So, can you tell us a bit about the terms of the deal and how it went?
Yeah, look, it was the placement itself was about 18% discount to the last trade. So it was around 26 cents. The last trade was around 32. Sorry, not 26, 2.6 cents versus 3.2. And we also offered a one option for every two shares taken up and at a 50% premium with a 2-year term.
Excellent. And obviously you've got production, so some of the revenue covers your costs. So this is really new capital for growth and doing some of the exciting things that we've talked about in previous videos.
Yeah, look, bottom line is our existing production pretty much covers our corporate costs and our staffing costs, and I guess what we're expecting is that our team will continue to generate new opportunities. So we had about 3.9 million of cash. What we basically topping up, and because we've got a very active program commencing first quarter 2026, so we'll kick off by the recommencement of testing on Welchar. That'll be something we'll start in January, and we're also been permitting and preparing in terms of long lead items and etc. for up to 3 wells that we want to drill, hopefully back to back, which would be shallow gas wells. And they're it's the first time we've drilled this type of prospect, which we're very excited about because we characterise them as very low risk and very quick to monetize. Now, if they're successful, then we've got about 7 more of those that we can go after. So it'll, while they're not very big, we're looking about 8 BCF on average that we're drilling, the first 3. They're very highly profitable, and they can generate a lot of cash flow for us. So we're looking at a well that you drill for about 2 million euros that could generate around 45 million euros of net cash flow. But we see the chance of success on these things between 70 to 80% chance of success, and it's purely because we've zeroed in our seismic on this particular gas sand, which is shallow, easy to interpret, and we're looking for, I guess, where these gas sands have not been drilled, and where you can, I guess, identify strong gas anomalies on seismic. And then beyond that, we're looking at drilling another well later in the year, close to Anshoff, because we'd like to get our production rate up and improve our profitability. We're also purchasing more seismic because we recently picked up that block offshore Sicily. We've got about 370 BCF of prospective resource that we best case there, but we see lots of opportunity for that to increase with stack pay. And so we're basically incorporating, I guess, 3D seismic that's close by to us, that in a very analogous field that's recently been developed by E&I, plus buying more 2D seismic, because originally when we went for this block, we were focusing on deeper oil prospects, but now we've got quite a few gas prospects that we're trying to, I guess, better identify, and then so we're looking to renew, if you like, our prospective resource, which was last done in 2022. So a lot going on operationally, and then part of our plan is, because we're an Australian listed company, basically all our assets in Europe. The very common complaint that I get from European investors is, yeah, look, we'd love to invest, but it's very hard for us to invest basically on the ASX, we'd be much more comfortable investing in a European listed entity. So we're getting good support out of Oslo. And the reason we like it is because the compliance costs are relatively low there, but also, there's good availability of capital, not only in terms of equity, but also potential bond finance for, developments or production acquisitions. So what we're trying to do is really try to build the company quite quickly. That's why we're going for the shallow gas, which we think we can convert to cash flow quickly. But then also looking to get onto a bourse where, we think right now that oil and gas is very undervalued, and it's a unique opportunity for us to build the entity in particularly in the areas that we want to operate in Europe, especially. And I guess the Norwegian investment bank that is following us also believes that's a good strategy. So that's what we'll be focusing on.
And with the shallow prospects, you own 100%, I think. So that gives you quite a lot of
There's a number
flexibility.
of prospects. The first one we drill will actually be drilled with M&D. Now they farmed into that block before. We've already drilled a well there. That'll be drilled at a 50% equity with M&D. The next well the next one we hold at 100%, and we'll either drill that at 100%, or we're also in quite, let's say, mature discussions with potential farminees who may fund that. Now, if we were a 100 million market cap company, I wouldn't even think about that because I really love that prospect, but we're not. So if we can get the right deal, we'd be looking to farm that out. But I guess ideally we drill 2 or 3 of these. We have success in at least 2 of them, and then going forward, we may be able to fund more of these at 100%.
And with respect to well chow, obviously the geological thesis has changed quite a lot since you drilled it last time, and now we've had a gap with permitting. So what will this well be testing?
Yeah, I mean, we're going to start at the top of the structure, where it's a kind of a less fractured carbonate, more vuggy, less fractured. Because the first test we did, we sort of looked like we intersected a water superhighway right at the bottom of this fractured carbonate zone. So we're coming back up to the top, and what we want to do is validate that the structure has worked, and we've got, if you like, hydrocarbons in the top of the structure. Now, knowing what carbonates are like, it'll probably require acidizing. So initially we'll test that zone, and then we'll look at going down into other zones that remain untested. And then that'll probably see us out for now. But we've also, I guess, reprocessed our seismic over well chow, incorporated the results so far, and we can see, if you like, good deeper potential, which is about 1,000 meters deeper. And that's kind of at a very similar level to where OMV tested gas and condensate, approximately, we're getting on 45 years ago. So, look, what we do know is there's been multiple periods of charging into this structure and into this play. So we're learning as we go. It's I think in contrast to what we're doing with the shallow gas and also what we're doing offshore Sicily, which have very similar characteristics. You're talking about shallow, very permeable reservoirs sitting between shales that really light up on seismic. This is obviously a more complex beast with carbonates, but it has also very large potential. So we will continue, if you like, to work it and understand it, because we do see good potential not only within well chow so far, but also well chow deep.
Excellent. Well, Ian, look, you're fully funded now for this exciting growth program. So before we wrap up, do you have a parting word?
Yeah, look, I need to say that it is important to get the funding to be able to put the programs together. And obviously, we were very well supported. We were highly oversubscribed, which is good. So we're getting attention on what we're doing. So yeah, we're really looking forward to this program, which is a much lower risk program. Obviously, Welchow is still a very high reward, high risk opportunity, but the shallow gas is kind of more meat and potatoes, but can really increase our cash flow by a factor of 5.
Brilliant. Ian, thanks very much and all the best.
Thanks, Ollie. Good to talk to you. Cheers and bye for now.